Welcome to the Political Checkmate, and today I'm going to checkmate Robert Reich's video on NowThis news called Proof Trump's Tax Cut is a Failure. Before I begin the video, the study that Robert Reich uses is this CRS study, which economists from the Tax Foundation have commented on the flaws of the study by pointing out that it overreaches its conclusion and many other problems. I, for one, would say that the Trump tax cuts were beneficial to the economy because this Heritage Foundation report looking at the data found that it grew the economy more than where the previous trend line was going without the Trump tax cuts. Now that I got that out of the way, let's get to the video.
It's now official. Congress's own research arm, the Congressional Research Service, released a report concluding that the Trump Republican tax cut was a total bust. Number one, it did not spur economic growth. According to the report, quote, the growth effects tend to show a relatively small, if any, first-year effect on the economy. Number two, it didn't raise wages. Quote, the real wage rate for production and non-supervisory workers grew by only...
On the first claim, well, the Tax Foundation responded to that part of the study by pointing out that the CRS messed up the CBO projections, and using the CBO data more accurately, you would find that the Trump tax cuts had a stronger growth rate than estimated without the Trump tax cuts, while on the second claim, the Trump tax cuts was designed to increase wages through increasing productivity through capital deepening, which is more of a long-term effect in wages because the time to adjustments in capital stock, but research has shown that the trend of Trump tax cuts compared to the pre-Trump tax cuts, the trend has an increased value of around $1,400 to workers.
1.2%. Number three, it didn't cause corporations to bring money home. Again, quoting from the report, the data do not appear to show a significant increase in investment.
On the Trump tax cuts' effects on investments, the Heritage Foundation, using data from the CBO, has found that the Trump tax cuts saw an increase in investment above the CBO projections in 2018, but saw a decline in 2019 due to increasing in the Trade Policy Uncertainty Index. In fact, the CBO themselves report that the decline in investment due to tariffs and business uncertainty. Of course, research from the National Bureau of Economic Research looking at the Trump tax cuts' effects on investments and did control for tariffs in the data and looked at 12,000 corporate tax returns and found that the firms that were impacted by the tax cuts saw an 20% increase in domestic investments.
Investment flows from abroad. Number four, it saved corporations a boatload of money. Quote, corporate tax revenues were about $40 billion less than projected. Number five, corporations use the savings to boost share prices and executive pay, but not workers' pay. Again, quoting from the report, while evidence does indicate significant repurchases of shares, either from tax cuts or repatriated revenues, relatively little was directed to paying worker bonuses, which had been announced by some firms. So there you have it, folks.
So on the corporate tax revenue, I would say first off, that's kind of the point of tax cuts. It is not supposed to maximize revenue. It is instead to increase economic growth and allow hardworking people and groups to keep their money. But of course, the Wall Street Journal reports that the corporate tax revenue is higher in 2022 than what the CBO projected before the Trump tax cuts. Of course, if you look at the overall tax revenue as a percentage of the economy, it would be higher than most years, coming at 17.2%. I would also be skeptical of the CBO estimates on the expected tax revenue because according to the CBO revenue projections have been too high on average in recent decades, mainly because of difficulties of forecasting the timing and nature of economic downturns. While on the stock buybacks, they are actually a good thing because economist John Cochrane pointed out that stock buybacks help get cash out of companies that don't have worthwhile ideas and into companies that do, and research has shown that stock buybacks help supply liquidity and reduce volatility in stock prices. And if you want to learn more about the stock buybacks, you should check out a friend to the channel. They're on the releasing videos for more information about stock buybacks. This is the end of the video. Thank you for watching, and please donate to my Patreon so I can make more videos and have your video requests checkmated. And thanks for watching, and have a nice day.